Well, as you see, I am, but our speakers are today as well, as we've learned during our pre-meeting. We are hosting this webinar from our home today. You might be working from home as well, so please bear with us if there is the occasional mailman at the door or any children or other disturbances that are uncontrollable. The webinar will be recorded, and later on we will publish this recording for your record, including the slide deck, on the website of the Nordic platform, which you can access on the hyperlink below. We know we scheduled quite a lot of time for this webinar, but I will do my best as a moderator to keep it as short and effective as possible. Maximum time is 11:30 a.m. CET. A little bit about South Pole. South Pole is a Swiss but global sustainability consultancy firm. Headquarters are in Zurich, but as you can see, we are spread around the globe, helping both corporates, governments, as well as investors with climate-related consultancy efforts. And this could be, for example, you might have heard of us as being the largest provider of certified carbon emission reduction projects. So we help organizations to become CO2 neutral. What I wanted to focus on for today is our sustainable finance arm at South Pole, in which we help with a dedicated consultancy team, the financial sector globally, on a series of consultancy services such as TCFD advisory, measuring the SDG impacts of financial products, and supporting net zero commitments. Particularly, we help investors with a new policy piece, the new European taxonomy, and how to measure alignment of a holding or fund with the taxonomy. I'd like to carry over to Mikko now from Gaia to say a few words about Gaia. Mikko, please turn on your camera, and the floor is yours.
Thank you, Ingmar. Good morning, good afternoon, good evening to participants. It's a pleasure to host this webinar series together with South Pole. Just a couple of words about Gaia. So we have been, during the past 25 years, working globally in sustainability matters in tight partnerships with governments, with companies, with NGOs, academia. And with regards to the Nordics, we've had the pleasure to work for the past 20 years or so actively, and also it's a pleasure to see that there are huge expectations towards the Nordics internationally to show leadership on SDG matters and leadership on Agenda 2030, and likewise on greening the financial sector. So for this reason, it's a pleasure to host this series together with Ingmar as well. A couple of years ago, together with the Stockholm Environment Institute and New Climate Institute from Germany, we had the pleasure to look what the Nordics could do to upscale their work on finance, on climate finance and green the financial system, and we came up with several recommendations. And sharing good practices, lessons learned, was definitely one of the recommendations, and this is what this webinar series, this platform, will hopefully do. So very much looking forward to a good discussion. We have excellent speakers and we have an excellent moderator with Ingmar. So look forward to it, and wishing you all a good session. Thank you.
Thanks, Mikko. Just a few words about the platform. So the Nordic platform is inspired by a series of developments such as the Nordic 2030 vision, the recently established Helsinki principles, and the platform is supported by a working group under the Nordic Council of Ministers, which is called NKL, the Nordic Working Group of Climate and Air, and that all brings together this platform, which consists of about 30 Nordic actors, but also including the European Commission and the PRI, for example. Just a slide on some names that are part of the platform. And today's program. May I ask everybody, Esko, Elina, Axel, Luca, to open your camera for a moment for the attendees to see you. If that words, that would be great. Esko Kivisaari will be speaking, representing Finance Finland. Esko, if you could maybe wave so that everybody knows who you are. Deputy Managing Director at Finance Finland. Together with support from Elina Kampi for any additional context or related questions to her field, as she's the Head of Sustainability at Finance Finland. And we have Axel Foner, Press Officer at the European Commission. Good to have you on board, Axel, representing the Commission. And we have Luca De Lorenzo from the Nordic Investment Bank, where he is the Director and Head of Sustainability and Mandate. So today's program will be kicked off by Esko. So Esko, the floor is yours, and may I ask all the other speakers to shut down their cameras and Esko to leave yours on and start your presentation. Thank you. Esko, we cannot hear you currently. You're on mute. I will unmute you. Yeah, we can hear you now. Go ahead. Yeah, we can hear you now. Go ahead.
Now. Yes, okay, good. Yep. There was some problem. I was unmuted, but I don't know what happened. So well, thanks for the introduction and thanks for Ingmar and Mikko about this. We divided our share with Elina so that I will make the presentation and Elina will ask all the questions. So hello from Finland, from Finance Finland. In these coronavirus times, we are happy to see that all the rest of you in different countries are learning to live your lives in the way we have lived them for 1,000 years already in Finland, with proper social distancing and no hugging, no friendly kisses on the cheek. So this is what life is in Finland, and now we have the Finlandization all over the world, with the rest of you learning to live your lives like this. I will talk a few things about how things have developed in Finland over a longer period of time, how we have been, so to say, running through this climate agenda. Then a few words about what Finance Finland and its members are doing currently, and then a few wishes for the future with respect to green bonds. We have really started talking about the issue more than 20 years ago, and mainly from the insurance angle. It was clear that the forecasts were pointing to the direction where there will be difficulties in the future. With respect to climate phenomena, we can think that there are changes in the probabilities, changes in the distributions of claims resulting from climate warming, and these can be just shifts in the distributions to one or the other direction, and certainly the risky parts increase already then, which is the left part of the chart, or there can be shifts in the distribution combined with an increase in the variability. So the variance also increases, and this leads even more to extremal events, which are of course a concern for insurers. Next one, please. Again, a copy of my slide 20 years ago. It was clearly identified as an insurance issue. Insurers were there to identify the risks because there were new risks. Some very rare risks that became more frequent. We were there to increase risk awareness of those most concerned for, and certainly showing this to the state, that the state needs to act in certain areas to maintain a sustainable environment. Then we were there to, when we have the databases of risks materializing, we had the analysis of risks, where and how losses happen, what can be done to them, what influences their frequency, and how then to go risk prevention on how to how to prevent unnecessary risks. And then of course the carrying of risk, which is the central roles of the insurance industry in making risks financially manageable. Next slide, please. Then one part of the discussion was what is the role of insurance in new forms of energy production. We all know that in all current business applications, there is a need for insurance cover. Without insurance cover, businesses are taking unnecessary risks, and they will face difficulties in their financing if they haven't been able to insure certain parts of their risks. The problem with that was and still is that the new technologies, they can be partially untested applications. It's difficult to insure, and therefore the challenge to the insurance industry has been to do research, to understand new technologies, to be able to insure the risks of these new technologies in energy production, so that the lack of insurance cover is not a hinder to the transition. It is remarkable in the slides, and I remember back then talking about this, was that all new technology 20 years ago, all new energy technology was experimental, and as such a very difficult area for investors. So back then I didn't see much opportunities for insurers as institutional investors to be engaged in investing for the new technologies. Old technology at that time was always old technology with the investment horizon institutional investors are applying, was 20 years ago always more secure, more profitable, and less risky than the new technologies. The next one, please. But the concern, this is not from 20 years ago. We had the similar ones 20 years ago. What we get from natural catastrophes or extreme weather events is that there is a trend going upward in this area. I remember back then there was not this so-called normalized line on the charts 20 years ago, and I remember criticizing these uninflated or inflated series in the way that climate is certainly one part of the trend, but there are the other issues like more and more people living in cities that are built in areas where you should never build anything, with more and more wealth to be insured. So there were other factors behind the trend going upwards. I think it's very good that Swiss Re now produces also this normalized greenish line there, where more or less other factors are taken out, and then we have only the result of what is happening with weather and climate. it is the trend is smaller, but the trend is clear, and there are thoughts in European insurance saying that the worst scenarios we can have, the 4 or 5 degrees scenarios, are really making world uninsurable. The trend will be too steep going upward. Next one, please. So what is the history really? It is a development where climate issues and sustainability have moved from PR departments to the boardroom. It has moved from insurance to investment, while being also, of course, important to insurance always. And then we maybe are using more the word responsibility than or sustainability than ethics. Sustainable development has become a key strategic issue, so it's discussed in the boardroom. Investing is very different from what we had before, because in the time horizons of the institutional investors, sustainability issues really do make a huge difference. So there is huge interest in investing, and things started from an ethical angle. And the ethical angle, of course, is good, but it's difficult because there are different incompatible ethics that one can apply. One can use the Kantian ethics or the consequentialism or the virtue ethics, and it's difficult to have across the board a definition what we mean by doing things in a way. If we talk about ethics nowadays, we probably more talk about responsibility or sustainability when you can define concepts in a way that is understandable across the companies and across countries. Next one, please. So in Finance Finland, our board has committed itself to going to the direction of the Paris Accord, limiting the increase in global temperature to at most 1.5 degrees. We are doing, as industry lobby, we are doing our part, but then our members are also committed in their actions to go to this, to fulfill this pledge. Next one, please. We are running a survey or the so-called indicator work with our members, and it is really showing that our members are as committed as we are to going to this right direction. When we have done the survey twice, in 2018, 87% of respondents said they take climate change into account in investments. Last year it was already 95%. In business operation, the increase is also quite huge and to the right direction in lending, fund management, payments, insurance. So it has risen from 78% to 90%. Next one, please. Then about in these sub areas in business strategy, climate awareness has gone from 65% to 85%. An area that is really important is risk management, from 61 to 80. Board level discussion is increasing in this. It's gone in 1 year from 70 to 80. And maybe the biggest increase is in setting concrete climate goals. In 2018, little less than half of the respondents were positive on this. Now it's 70%. There is still work to do We of course want all these to be at 100%, but you see that the direction is good and the speed is quite remarkable. Next one, please. Then we are very positive of the EU green bond standard. Certainly, when we have the standard, it's easier to emit bonds. You know how you can make a green bond, and then for the investor, it's easier to buy bonds when you don't have to make due diligence with each and every one of these bonds you are trying to buy. You can trust on them fulfilling the EU green bond standard. We feel that the taxonomy should be the basis for these green bonds, and the status of a green bond should be admitted to those green bonds where the proceeds are aligned with the taxonomy. One of the big difficulties in this area will be the long-term view that a bond, according to today's standards, might be green, but you are not certain what it will be in 5 years. So it would benefit the market if you had certainty in a bond remaining green through its whole maturity, because otherwise you will run into troubles with green bonds being changed in the status. Next slide, please. Then in the area of our local legislation, we have some problems that need changes to make mortgage lending better. One of the examples where we are active currently is that the energy certificates of detached and semi-detached houses should be electronically available to banks. With this better availability, we are quite certain that there would be a boost to energy efficient construction and renovation work. Then the availability of these certificates need a change in the legislation, so that there would be access to certificates for the purposes of the lending process. And we need to also remember that currently there is quite clear evidence that energy efficient housing involves a smaller risk of customer insolvency, which really makes a difference on the terms how you grant loans to these projects. And next one, I think I'm almost done. This is still about our members' activity in this area. This is a chart showing how much our members are involved in different collaborations and commitments, and the most frequent there is certainly CDP, but also climate action and UNPRI are quite high on the agendas. But this is more or less describing how we have come to here and what would be our wishes for the world going forward. And now I'm handing back to Ingmar.
Thanks, Esko, for that great introductory speech to today's discussion. what I want to do is select one question for the audience for you to answer, and then we proceed with the next presentation. So you referred to a member study. So Finance Finland has over 300 financial industry members, and one listener is interested in learning more about the 87% of members that mentioned to take climate into account. Could you give a few examples of how this is done, in particular in the financial sector in Finland, among banks, most of your constituents?
Firstly, I need to say that the number refers to the percentage of those who have answered. And well, then on the other hand, about the numbers there, we could say that there are quite a few of the companies or members who are a part of a bigger group. So for example, in cooperative banks, there are lots of cooperative banks as our members, but we think that what really makes the difference is what the OP group is saying in this area. But then about the concrete examples, I would maybe most, and I think it's also in the scope of this webinar, the pension insurers as our members. They are the biggest institutional investors in Finland, and when you look at what they are doing, you get a very, very concrete understanding of how they want to make their investment operations and also other operations green, how they are decarbonizing their investment portfolios very quickly. So I would really advise you to look at their sustainability reports that are accessible through their websites, and also these reports have really gained very much attention globally, as these companies and their reports and their actions are ranked very high globally. I hope this gave a partial answer, at least, to your question.
Thank you, Esko. Let's move on with the next presentation by Axel from the European Commission on the Green Bond Standard. Esko already alluded to it in his presentation. May I ask you, Esko, to shut down your camera, turn it off, I should say, and Axel to turn on your camera. The floor is yours. If you unmuted yourself, Axel.
There we go. It said I was it was forcefully muted. So yeah. First, maybe I should just correct something. I used to be press officer, but now I'm working more as on policy, specifically working on the EU Green Bond. That's my fault for not updating my LinkedIn profile, so apologies to Ingmar for that. So I work in the European Commission in the DG FISMA, which is the Directorate General dealing with the financial services. I'm on a team of, we're about 5-6 people working on the future EU Green Bond Standard, which is of course part of the broader sustainable finance work stream of the European Commission, on which the Commission has been working now for 3-4 years. So the EU Green Bond Standard is one of those many initiatives, which I will focus on today. I think you're already familiar with the market, but here's some background on green bonds and what they are. Most of the time, green bonds is an instrument where the issuer commits to use 100% of the proceeds towards green investments or expenditure. Legally, they're no different from regular bonds. However, they come usually with a green bond framework, which is a separate document that sets out some specific details on the green bonds. There are already today certain, we can call them market-based standards, the most well-known one being the Green Bond Principles of ICMA, of the International Capital Market Association, which has sort of recommendations for how to issue a green bond, which are very commonly used. Then you have the Taxonomy of the Climate Bond Initiative, which sets out more detailed criteria for what should be considered a green investment, which is something that the EU has now also done with its taxonomy. If you look at the market development, the first bonds were issued around 2007-2008 by the European Investment Bank and the World Bank. So public sector issuers such as this have been very active in the market, but we also see now that the corporate bonds are corporate green bonds are growing very quickly. And Europe is the largest green bond market today, with about half of issuance. So if we go to the next slide, I have some figures on this. Here you can see the overall growth in the green bond market, and also the diversity of issuers, including financial institutions, non-financial corporates, governments, etc. If we go to the next slide, you can see how the European market has really taken the dominant position here. We have, for example, a large number of European sovereigns issuing green bonds, a large number of European corporations issuing green bonds. We've also seen that the euro, the currency, is becoming the dominant currency, with about half of green bonds issued in euro, and a lot of, even including outside the European Union, we see green bond issuance that has taken place in the euro. So this is a welcome development for us. Let's move to the next slide. I'll try to go quickly through some of these. Sorry for the cutting off there. This is the quick history of what's happened on sustainable finance so far, from the point of view of the EU. On top there, you have the high-level expert group on sustainable finance, which set out the main principles that we have been following. So they published their report at the end of 2017. And then in March 2018, the Commission published an action plan with about 10 actions. One of these was to make progress on standards and labels in sustainable finance, and the EU Green Bond Standard is the outcome of that. Another very important initiative was the creation of the taxonomy, which is basically a classification system for green investments. So I will talk a bit more about this later. What we did to put all this in practice was we appointed a technical expert group that basically drafted or agreed on a blueprint for the taxonomy, and also a blueprint for the EU Green Bond Standard. And then the Commission on its side has sort of worked to turn this into policy and into hard legislation. Now the Commission is working on a renewed sustainable finance strategy, aiming to take sustainable finance to a more ambitious level. And the renewed strategy is scheduled for publication in the first quarter of next year. Let's go to the next slide, I think. So here you see the original action plan from 2018. Just notice the first action being the taxonomy, and the second action being to develop EU standards, including the EU Green Bond Standard. There's also been a lot of work on benchmarks. We have published a legislation, or we have adopted legislation on climate-related benchmarks. We have adopted legislation on disclosures for financial institutions relating to sustainable products, etc. Let's go to the next slide, I think. So what is the taxonomy, first of all? This is important to go through because taxonomy is the basis for the EU Green Bond Standard, the future EU Green Bond Standard. Taxonomy is basically a classification tool to define what is a green investment. Of course, there are a lot of different investments that can be counted as green, including things that are obviously green, such as renewable energy investments, but also things that are maybe, you know, you wouldn't immediately think of them as green, but it can also be the transitioning of a traditionally brown sector, such as steel production, into a more sustainable way of producing. And the taxonomy also sets out how this can be defined as green. The taxonomy looks at individual economic activities, so it's not just the sector, it's also the individually what are you producing, what are you building, and therefore it has a high level of granularity. The taxonomy, as you can see on the right-hand side, has basically 3 criteria for an investment to be considered green. It has to substantially contribute to one of the 6 environmental objectives, and you can see the environmental objectives are climate change mitigation, adaptation, and then there's 4 other objectives related to protecting the environment. So that's the first criteria. The second is that it has to not significantly harm any of the 6 objectives, which means that if you are investing with the purpose of mitigating climate change, you also need to make sure you are not damaging biodiversity and ecosystems, for example. Finally, there are social safeguards, which all investments under the taxonomy have to follow. Let's go to the next slide. So the blueprint for the EU Green Bond Standard was drafted by the technical expert group. And in the following slides, I will base myself on the proposal that they made. They published a report in June of last year, and then what they call a usability guide in March of this year. So they analyzed the green bond market, looked at what the issues were, and then thought how to rectify that. Basically, their analysis was that there is a strong investor interest in green bonds. However, it's costly for investors to identify genuine green bonds, to do the due diligence, because there is a lack of standardization in the market. That was the main problem. Also, there is no official green bond standard. So even if you are relying on a standard to help facilitate the work of estimating what is a green bond, you're not sure which standard to use. And I think it's fair to say that the dominating ICMA green bond principles, they are quite broad. So it's not necessarily enough to know that the bond is as green as the investor would like it to be. Finally, we also see that there is no formalized accreditation or supervision of the market, of the companies acting as reviewers or verifiers on the market. So we've also seen that there's quite a divergence in the actual output or the methods used to review and verify green bonds. They also looked at the issuer side, and there the problem is that there is a lack of sustainable assets, which is preventing issuers from issuing enough green bonds. Also, there is no common definition of green, as I have already gone through, and we see that issuing green bonds leads to additional costs. So there is, of course, for the issuer a cost-benefit analysis when considering whether to issue a green bond, and we see that too often this analysis may be leading the issuers to or maybe causing them to hesitate a bit before issuing a green bond. So the result of all this is that the market itself, the market for green bonds, is not growing as fast as it potentially could. So let's look at the next slide, what the technical expert group have proposed. So they proposed a green bond standard with 4 elements. So apologies for the messy slide. If you look at the left-hand side, the column here, you can see the 4 main elements of the proposed EU green bond standard. First of all, they proposed that green proceeds should be spent on green capital expenditure in line with the EU taxonomy. This is the sort of fundamental principle of the future EU green bond standard. They want, of course, the EU green bond standard to be broad, meaning that many different types of assets can qualify, including physical assets, financial assets, whether tangible or intangible. Also, certain operating expenditures, such as maintenance costs, research costs, etc., would also be able to be used under the green bond standard. But the main rule will be that it has to be in line with the taxonomy. The second recommendation of the technical expert group was to publish a green bond framework. This is already a standard practice today, but the idea is that the issuer would outline their strategy, their procedure for selecting eligible assets, and their plan for reporting and verification in the framework. Then there were certain criteria or requirements based on best market practice today regarding reporting, notably the publication of a report on how you allocate proceeds, and also on the final impact of the bond, the impact on the environment, and also recommendations or requirements for verification by an external reviewer. Let's go to the next slide. So how do these recommendations by the technical expert group contribute to addressing the problems in the market today? Well, the use of the taxonomy with the clarity that it brings to the definition of green investments will hopefully help to alleviate the problem of a lack of sustainable projects and assets. For example, the example I gave earlier about the steel manufacturer, which could produce steel in a more sustainable way. This is an area where the taxonomy could help to bring assets which otherwise may not have been recognized as green potentially into the market. A second barrier, the issuer's concern with reputational risks and green definition. This is a potential worry for an issuer because they may, after publishing a green bond, face let's say a backlash or a reaction from those claiming that their bond is not sufficiently green. So by having a taxonomy and having commonly agreed definitions of what is green, the issuer would avoid this risk of potential reputational damage. Finally, the absence of clear economic incentives, which is linked to and the cost of issuing green bonds, which is linked to the complex and costly procedures for external reviewers. Here, the technical expert group deemed that by standardizing these procedures, it may help to bring down the costs. Of course, the technical expert group recommended rather rigorous external review. So, this in itself could raise the cost, but at the same time, having a standardized way of doing it would reduce uncertainty for the issuer. Let's go to the next slide, I think. Yeah, here I have listed some examples. How could you use the EU Green Bond Standard? Well, in sectors that are already low carbon, it's relatively straightforward. The taxonomy would set sort of rigorous criteria for what can be considered a renewable energy investment, or what can be considered a taxonomy aligned low carbon transportation. But we also see that for example, here the steel company would be an example of a sector that the taxonomy could help to make greener, right? So the sector in itself is not green, but the EU Green Bond Standard could still be used in this area. Going to the next slide, we have a few more examples. So yeah, I think we can maybe go straight to the last slide here. This is fine. This is a quote from the President of the European Commission in her recent speech called the State of the Union speech in September, where she mentioned green bonds. She mentioned the EU's strong position in green bond markets. And then she mentioned the ongoing work on developing a reliable EU green bond standard, and also announced that the Commission would set a target of 30% of its forthcoming 750 billion euro bond issuance to be raised through green bonds. So this is something that this is an area where the Commission is currently working on its own green bond issuance. The final details of how that will take place have not yet been clarified. This is also something that's up to the EU member states and the European Parliament. But what I can say is that the work on the EU Green Bond Standard itself is progressing quickly, also helped by this latest momentum. We expect to come forward with more clarity or an announcement on what the standard would look like in the renewed sustainable finance strategy, which, as I mentioned, is scheduled for the first quarter of next year. And then the Commission proposal for an EU Green Bond Standard should be ready by the second quarter of next year. And then based on that, or following that, it would probably be a legislative standard, which means that it would need to be adopted by member states and the European Parliament, which means that it may take maybe another year or so before the final standard is ready. But the Executive Vice President of the European Commission, Valdis Dombrovskis, who is in charge, or used to be in charge of the EU Green Bond Standard, he already asked market actors to start using the standard back when the TEG, the Technical Expert Group, published their usability guide in March. And we have already seen some examples of issuers referencing the taxonomy. We have seen sovereign issuers making references to the EU Green Bond Standard and having some elements of their green bond frameworks aligned with the future standard. So this is already, we're already moving in the right direction here. Thank you.
Thank you so much, Axel, for that wonderful presentation and the clarity as well. Thanks for ending with a timeline on when more news can be expected for the Green Bond Standard. Mikko has been taking a look at the questions that are coming in from the audience. Mikko, may I ask you to take one from the audience for Axel?
Yep, thank you, Ingmar. Axel, one of the questions from the audience is asking, is there analytical analysis being done by the Commission related to the additionality question of green bonds? Is there something you can tell about that?
Yes, there is work being done on this. So the premise for the question, or you could link this question to the issue of financing or refinancing of green projects. So it's market practice today that green bonds can either be used to finance, let's say, current or future investments, or to refinance relatively recent green investments. We saw, for example, in the recent green bond issued by Germany, sovereign green bond, that the proceeds from the bond will be used 100% to refinance recent expenditure from the year before. But in other cases, you have 100% financing of future expenditure. So in the EU Green Bond Standard itself, the Technical Expert Group proposed that we would have both financing and refinancing be eligible, and that the Technical Expert Groups, we usually take that as our baseline. But then we also had a question in, I forgot to mention that we recently concluded an online consultation on the EU Green Bond Standard, where we asked stakeholders all across Europe and the world for their reactions to the Technical Expert Group's proposal. And we received 167 responses, which we're analyzing right now, and we should be done with that quite soon, actually. And one of the questions we asked there was about this additionality. So we, of course, it's important that if you issue an EU green bond, that should have a positive impact on the environment. It shouldn't just be a claim that you make. However, I'm not, we're not sure yet whether that means that refinancing should not be allowed, because even if you are refinancing previous green investments, you're still freeing up funds for future green investment. And there is ongoing, your question referred to this, there is ongoing analytical research by the European Commission's research body called the Joint Research Center, which is looking at exactly this question.
Thank you, Axel. Thanks, Mikko, for selecting that question. Wanted to install a quick break for us, because you've seen that we've asked a question to you prior to registering for this webinar. And that brings me to the main objective also of the Nordic platform and the webinar series that we are hosting, which is to think together about if or if not there is a role for Nordic governments to facilitate or to help the financial sector with understanding or implementing the green bond standard. But we've asked the same question regarding the EU taxonomy or the EU climate benchmarks. So we just wanted to share some answers that came from the audience, and they're quite diverse. So some recipients mentioned that there's clearly no role for Nordic governments in this regard because there are already generally accepted standards. But we've also seen a series of positive answers. Yes, there is a role, and collaboration, for example, is a key aim here. Now, what I wanted to ask you is to think about this question and to answer the question in the question box so we can take it further with us during the Q&A, because that will be the moment when we will be discussing with our panel what their perception is of a role for the Nordic governments to support with facilitating the green bond standard. So what role would this be according to you? What role would this be? We're happy to learn that from you. And in the meantime, may I ask you, Axel, to mute yourself, turn off your camera, and then I'm happy to give the word to Luca De Lorenzo from the Nordic Investment Bank to continue with his presentation. Thank you.
Yeah, thank you, Ingmar, and good morning to everyone from my side as well. So I'm the head of sustainability and mandate at the Nordic Investment Bank and lead a team of environmental analysts and economists. The Nordic Investment Bank, as many of you know maybe, is a mandate-driven, publicly owned bank. So we are owned by the Nordic and Baltic states. And basically our mission and our core mandate is, of course, to instill productivity and sustainability in the economies of our member countries. So we are very, very involved in the topics that we are discussing today. What I'll try to do in the next minutes is to just share a little bit our experience, especially with relating to green bonds, which we environmental bonds, then maybe have a couple of reflections on
Luca, are you still there? We're losing you.
Green bonds in 2011, and we have issued quite on a regular basis since then, over the last basically decade, making us one of the largest Nordic issuers. So we've had quite an experience in shaping the framework, our framework, which we updated in 2018, which has quite a dark green profile. And overall, I would say we've had a very positive experience. I mean, I think as an institution, green bonds have served us very well, but I think this phrase, as we heard from the speakers before, is useful for the entire market. We've seen that the last decade basically has been around growth in green bonds. It has been around increasing transparent impact reporting. We have learned how to issue, we have learned how to talk to investors, we have learned how to report impact better and better over years, and how to identify and select the right projects to fit into our program. And this has been a very positive experience. I think we've discussed it a lot from the financial numbers perspective, but if you show the next slide, I think it's also very important to ultimately focus on what is that we do this for, and that is to actually achieve impact. There was an excellent question around additionality. Sharing our experience, I think when we look at the at the overall bond program that we have had over the last decade, and the impacts that you see here, they're pretty small, but you can read it in our impact reports on the right-hand side, and you actually sum up the reduction of nitrogen in the Baltic Sea versus the amount of renewable energy capacity addition or the CO2 avoided numbers, and this is the real ultimate impact that you want to achieve. Sure, some of that additionality is not always there, but overall, I would say that it is well represented and hit in terms of additionality. Again, that's for us, but I would easily and comfortably say that would apply to the majority of the market. And on the left-hand side here of the slide, you see the allocation basically of our funds as a use of proceeds, of course. So the allocation of proceeds across our categories, and it, again, quite well distributed between green buildings, renewable energy, water management, clean transport solutions. So again, across a variety of sectors and trying to get the impact. So overall, I would say our experience, and I think again from the market perspective, this decade of green bond has been very good. And I think if we go to the next slide, I think as we heard from Axel, now the EU has taken good leadership in setting standards and references, and I think it's actually a very good time to come in with this. The market, I would say, is ready. You know, it was good to let it develop on a voluntary basis with green bond principles, with CBI kind of shaping and slowly narrowing down what we were doing in the market. But now I think, as Axel was mentioning, if we really want to increase further the growth, mainstream even further this type of instrument, having clear references, clear standards, at least at a European level, is very positive. We see it very positive. Again, you get, and I think it's not so much we can discuss the actual definition, but the importance is not so much the definition in itself, but the fact that we have a reference. So this EU green bond standard, or the EU taxonomy even better, I'm sure will act as a reference for Europe and globally for market players to really identify and quickly go to market with some of the products. Now, the next thing that it could also do, and here's my last bullet, I think it will also help actually as a framework to maybe facilitate alignment of incentives in the real economy, in the policies that we have in each sector, to actually generate that pipeline of assets and projects that we can then finance as banks or as investors in terms of having real impact in the real economy. If we go to the next slide, just one reflection, however, is that these are all the positives of setting standards and regulations. So you get clear definition, reference, comparability. There is also a push for verification, which we also welcome. And these are all the positives. Of course, but by nature, when you have standards and regulations, you tend to create a system that is a bit more rigid, a bit more standardized by definition, right? And that can cause some hindering or reduced innovation and flexibility that sometimes this market still needs, because as we know, sustainability and these kind of topics are still very much in the flow. And every year that passes, we are aware that we need to do different things, and technology evolves and so on. I think the EU has done a fantastic job through the various set of consultations, the TEG and the Commission, various set of consultations. I think they've taken on board a lot of these elements and made the taxonomy through the rounds as they came out much more flexible, much more clear in how to use it, in usability and interpretation. I think that's very welcome. So in my message on this slide is, some of this is inevitable of having some of these pros and cons, but I would say let's focus on the pros, which are great, and let's get on with the market, and let's try to mitigate or try to be, open-minded on the cons. And I think, the EU has had exactly this approach in its latest versions of the standards. So we're pretty pleased with that. If we go to the next slide, I would anyway. like to introduce this idea that, of course, green bonds, as I said, has served us very well in this last decade. But I still think whether in the debt market, the opportunity market now, and a bit my message on this. And the reflection is that we are in 2020, first green bonds in 2008. But the task at hand is still enormous, right? Sustainability, we still need to embed it really not only in single assets and projects, but we are seeing that we need to completely transform entire companies, entire sectors. Supply chains themselves need to be reorganized. And honestly, when you have a large corporation with a very, very long tail of supply chain that it manages or that feeds into it, you have to ask yourself, should you not take the responsibility for that part of your supply chain as well? And I think all of these considerations are being discussed more and more, and correctly so, in the sustainability dialogue. But then if you look at the green bond instrument, for example, if you're changing your business model of a company, it doesn't necessarily match with having an asset, a specific use of proceeds type of concept as you do this transformation. Having said that, I think the taxonomy does allow for these type of considerations. So again, I very much welcome that. And also, as Axel already mentioned, when you look at hard sectors, so let's say more brown or definitely not dark green sectors, and we know we need them on board to hit the targets. But we also have seen in the market that when they do try to come out with green bonds, the market doesn't always react so favorably, right? So how do we ensure that also these guys can come at the table and really, have a credible transition, a credible path, and that we can finance them with some sort of green finance instrument that allows them to be part of the change rather than excluding them from the change. So these are all relevant considerations. And again, as we enter the new decade, I think we really need to embed this in the debt market as well. So my next slide is to introduce a little bit this idea of double type of thinking when it comes to potential products in the debt market. I think you have a very kind of two ways you can look at the problem. You have very clear use of proceeds type of approach where you basically promise the investor exactly what you're going to do with that money that you're getting from the investor, and you commit to spend the money according to a certain framework and a certain set of assets, projects that you will finance. And then it's a matter of defining how green they are and how sustainable they are. And here, this is the type of green bonds, sustainability bonds, green loans. These are the type of instruments that we have seen growing over the last decade. But I think there is another emerging maybe type of instrument, which is more performance-based. And here, the approach is not around promising exactly what you're doing with the money, but rather linking the investment to a change of direction at the corporate level, setting very clear targets. For example, they could be climate targets, CO2 emission targets, they could be around resource efficiency, whatever they are, at a company level or at a supply chain level that really re-steers the entire business. I think this is very interesting also approach to sustainability, different than the use of proceeds, but it can definitely, again, help us in getting the long-term targets that we have as economies. And I think the most important word in this slide for me is complementary. It's underused. And because I do think that both of these, I don't think the question is which one of these instruments will succeed. I think they can both live together in the debt market, and they serve partly different purposes. And so it's a matter of, depending on which sector you're in, which company you are, where you are in the journey of transitioning, which is the best product for you to use. And that's a good way forward. So let me just finish off maybe with three ideas, going forward, that we see three trends and innovation. The first one is more around use of proceeds. So here it's maybe around, we've talked a lot around green bonds. Again, those are being now, with clear reference, but I think there is space to increase labeled thematic bonds. We have seen some of that. So you can have sustainability bonds, you can have social bonds. We have done now a couple of blue bonds focusing on water, but you can then do biodiversity. We have seen several bonds coming out. And again, here it doesn't really matter what the name is and what the focus is, but the point that you take the use of proceed concepts even further and you narrow it down to a specific focus, to a specific impact, and that's the commitment that you have to the investor, right? And you become even better at reporting on that impact and getting really a change in what you are defining you will change. Yeah. So that's I think a good, potentially a good development. If you go to the next one, next slide, then instead on the performance type based, we have mentioned this already today in the session, but I think sustainability linked bonds and loans is a product in the debt market that have started to come out, and I think can have a place to expand further. The green bond principles have come out, which we are part of, with a sustainability linked bond principles. Please take a look at that if you can. I think they're quite precise and well defined, and they built on a sustainability linked loan principles that were done a few years back. Okay. But again, this is a different type of instrument. This is performance-based rather than use of proceeds. But again, a very interesting innovation, I think, in the debt market. And then finally, a trend that we think we are trying to follow as Nordic Investment Bank, which is relevant also to what Axel mentioned in terms of costs when you do this type of instruments and sustainability type of instruments. And that is around impact reporting. I mean, we cannot, again, over the last decade, I think impact reporting and sustainability reports have become much better. We at the Nordic Investment Bank started with a good report, I think, but over the years, now we are giving impact per project. We have Excel databases that the investor can go in and really dig through what kind of impacts the bonds achieve. But that's a lot of work. Let's be honest, that is a lot of work. So a trend that we think is very important, especially from both a transparency point of view, but also a cost reduction point of view, is using digitalization to do this much better. More real time, faster, granularity, being able to deep dive or have high level views, and again, streamlining the whole thing. And we are participating here in the Nordics. We have two, let's say, two outfits that are really going forward with this. One is a young startup, a green asset wallet. Another one is a more established, it's Nasdaq Nordic. But again, they are trying to construct basically impact reporting platforms online that allow a much better exchange of data, impact data, related to the financial instruments, green bonds or the likes. So we see that pretty interesting development. So if we go to the next slide, just to conclude from my side, to sum it up, I think we have had a very good over, let's say, decade of green bond development in the market. I think that has served us very well, both as Nordic Investment Bank, but I think as a market. I think what the EU is doing, coming in with regulations and standards, it's good timing, it's the right moment, and hopefully it will allow to further grow that part of the established green products and market. But as I said, my last message would be, I would hope that we allow for innovation to continue. So other new labeled bonds, performance-based type of instruments, and maybe something we haven't thought about yet. I'm open for that as well. And digital impact reporting. So, let's continue to innovate because the task at hand is pretty challenging still. Okay. So with that, I'll conclude. Thanks, Ingmar.
Thank you, Luca. Thank you. In a moment, I'll ask Mikko to select a question from the audience. I'd like to take a moment to ask a question from my side, actually, is is how do you stay on top of the most impactful projects that create both a sustainability impact that's also aligned with NIB's vision, but also are able to generate the financial returns that NIB obviously is aiming for. So could you say a bit about the sourcing strategy, or how you stay on top of these projects?
Well, I mean, this is on our lending arm, but of course let's say we operate primarily in the Nordic Baltic region, so we do a series of things. But you try to stay on top of the sectorial trends and what is needed to do sector by sector. We look at the policies of our member countries, and therefore try to align our activities to what the targets are of our member countries and the policies implemented in our member countries. But then I think the most important is to keep a very open and constant dialogue with clients. So we are a bank, so we operate, we don't have change directly in ourselves, right? The change ultimately happens in the corporates and in the municipalities that we finance. And so it's having a dialogue with them to see what is the strategy that they have, what is their pathway, and what are the projects that would feed into that strategy of change towards sustainability, so that you can have a view on the pipeline, let's say, of projects coming up.
Thanks, Luca. That makes sense. Mikko, over to you. Anything coming in from the audience for Luca?
There are a couple of questions, and if possible, I could come up, and some of them are, I think, for Esko, some of them are for Luca, and some of them from Axel or all of you. So maybe the first one I could ask Esko and maybe Elina. Esko, thank you for providing quite an extensive look also at what happened during the past 20 years. How do you see, what would you not like to say 20 years from now, if you look at this situation? What would you like to have seen? The green bonds are still a small section of, most of it is brown. Luca referred to the real economy and the massive tasks at hand. So what would you like not to say 20 years from now, or what would you like so that you and Elina would have taken care of 20 years from now? Is there something, would you like to play with that idea?
Should we turn this to Elina, who is longer around? Or, well, what I would say, at least when Elina is thinking, is that certainly the important thing are the political guidelines or commitments now taken, and the decarbonization of the societies. My personal wish is that this is going strongly forward, and it really gives the backbone to investments also. But Elina, please.
I hope you can hear me. Yeah, naturally we would like to see market growth, and that we would not have to talk separately about sustainable finance or necessarily green bonds and so-called mainstream bonds or mainstream finance, but that sustainability would be like a granted thing in every financial decision making, and that we would have a system where information about projects' sustainability impacts would move more smoothly than at the moment, and the verification of the projects would be easier than at the moment, and that would create trust and credibility in the market, and that will boost the growth.
Thank you, and Esko, back to you one more time then. If you look back 20 years, is there, of course, in hindsight, it's always easy, but is there something you think we could have done differently to get from this rigid and narrow insurance perspective on climate risks earlier out to a more mainstream understanding, and also the finance sector to get it moving earlier? Is there something we could have done even better, or should have done, I guess?
I think we could have done many mistakes in addition to what has been done. So basically, this is a ship that is turning quite slowly, but the turning has been remarkable. So of course we could have done things differently, but I'm afraid that the early movers could have done very many mistakes. So I'm quite happy on how on the current direction of where we are going, and happy to be a part of that.
Yep. Thank you. And maybe then to Luca and Axel, if you say the task is massive, and why isn't the market maybe growing even faster? So the question to you is, where do you see, you already touched on this a little bit, where do you see the biggest bottlenecks? Ingmar asked about the sourcing aspects also, but how big a challenge do you see, for instance, in the awareness and capacity and knowledge? For instance, do we have the people who have the capacity to build those project pipelines and to do the impact measuring so that actually grow at the speed that we all want? Do you want to look at start or Axel?
Sure. I can give it a crack. I mean, and it also relates to me. I would like to answer also this: what is the role of Nordic governments to facilitate? I link it up. You know, for me, if you look at the situation where we are now, you know, you look at the market, there is a lot of liquidity out there, and there is a lot of green liquidity out there. All of the green bonds that are out, you know, typically are oversubscribed by, you know, by a factor of 4 or 5 or whatever, you know, factor. So the issue is not so much green money or green capital. The bottleneck is, as you say, is more around maybe project pipeline. And again, if you look also just the financial situation, it's surprising. Some of it is related to COVID, but you know, we have extremely low interest rates in the world, and yet we have extremely high savings. You know, corporates are sitting on cash, banks are sitting on cash, and individuals are sitting on cash. So we have somehow, the government needs to somehow bring that clarity and remove whatever, you know, put some real economy policy that can unlock some of this big, whether it's infrastructure, I don't know, whether it's projects that are aligned with the taxonomy. So I like very much the taxonomy, but I think it should be read also not only for the financial market, actually. Why not, you know, put in place real economy policies that are aligned with the taxonomy and therefore deliver to the financial market the type of projects and investments that then we could easily fit in. So that for me, you know, it should be all a package.
Thank you for linking it with one of our main questions also for this webinar. Axel, do you want to take a crack? Does the question have some kind of possibilities to link, and do you see the bottlenecks also in the pipeline or somehow maybe in the expertise area? Do we have the people and the organizations, institutions that have the capacity to make this taxonomy into flesh and blood?
Yeah, that's, I mean, first of all, I agree with what Luca said, but you know, this is a pretty broad question. One particular area where we are looking at, and where the EU Green Bond Standard may make a difference, is external reviewers. So the technical expert group had pointed to, and others have pointed to, quite a large diversity in the type of second-party opinions, the quality of second-party opinions, and the type of things they look at, the type of language and KPIs that they use in their reports. This also applies to post-issuance verification. And so I think that what we want to do is to strengthen this ecosystem of companies that perform such external review services. And one thing that we're looking at is to have a more centralized regime for authorizing external reviewers. So it would look at the type of procedures they have in place, you know, and of course their qualifications and experience, etc. That's also something that we're still analyzing, looking into. So I can't say much more at this point. I don't know why my camera decided it's so dark in this room. It's not.
And
the dark side of the force, I think.
And definitely this thing where the Nordic governments do have a strong commitment to the green and equitable recovery, and this should be quite a moment to exactly make use of the taxonomy and all of this, not to miss this opportunity. Ingmar, I have one more question here, but do you want to step in here, or shall I shoot the?
Go ahead, Nico. Go ahead, please.
Maybe this is Luca, maybe to you, but I'm sure then Elina and Axel and Esko feel free to jump in also. My question is that to what extent do you see that there is any particular lessons we could draw from this a decade of green bonds? You started to speak about the different colors and different thematic bonds, and 25% of NIB projects go to water-related issues. So water is close to climate. So my question is, how do you see, is there something we could learn for the forthcoming and the growing market of resilience bonds? Is there something we should take into consideration there, or is it just doing the things properly and doing the proper due diligence in the pipeline phase, and then actually it's not that complicated, or should we address it in some other manner?
Yeah, no, I think, you know, the fundamentals are very similar to the green bonds, and, you know, it's a use of proceed concept. So in that sense, it works just the same, and that's why I think it's an easy further development. Actually, it's, you know, it's an easy step to take further. What is good with you know, with a specific thematic bond is that then you narrow down even better the framework, and you can be even more precise about the type of projects and the type of impacts. And as Axel was saying, you know, that makes it also easier than what are the actual KPIs, what is it that we are trying to track. So the wider the framework, you know, the less the depth, right, you need to have, right? You need, otherwise it becomes overly complicated. While if you can focus, it can work. So, but the fundamentals are the same, I would say, in that product.
Thank you. Axel or Elina, Esko, do you want to add anything here, or shall we give the floor back to Ingmar?
I maybe going a little backwards. The previous question and the answers hinted to these outside bodies doing the so to say auditing of things. And certainly with green bonds, I think it will be quite clear we need this. But on the other hand, I wouldn't like to create a heaven for all kinds of consultancies in this area. I'd rather think that it should be also possible to leave and proceed to sustainable future without too much overhead in this area. And for this reason, we have made our proposal in corporate sustainability reporting to go forward with the database for the raw material in a single site, to have access there and to be able to really build a cost-efficient path to the future.
Thank you. Ingmar, over to you.
Thanks everybody for the discussion. And what remains me to say actually is to thank everybody for the discussion we've had. Thank you everybody for the presentations, for all the attendees that have joined and shared their questions with us. They were very useful. Just wanted to mention a few of our upcoming webinars that will be there in the coming weeks. There will be one for the corporate sector on physical and transition risks, where Fiskars EK, that's the Confederation of Finnish Industries, and H&M will partake, and our final financial sector webinar, which will be on climate risk and data, together with the PRI, Norfund, NDF, and IFU. You can click on the link to register in for these webinars. Thank you for attending, and we hope to see you again. Take a look at the Nordic platform to learn more, and we look forward to seeing you again. Thanks for being on board with us today, and we'll hopefully be in touch again. Thank you all.
And remember the Finnish way of living with good social distancing, so you will stay healthy.
Exactly.
Thank you.
Thanks, everybody. Bye-bye.
Bye.